What's good, traders? I hope you all having a great weekend. Welcome to a special bonus breakdown. Every now and then, a ticker deserves its own analysis, and SpaceX definitely earned one Friday. SpaceX exploded out of the gate on its debut session, finishing up 7.30% off the open. And what a debut it was. But the real story happened beneath the surface. Buyers came in aggressively, pushed price to fresh highs early, then spent the rest of the day fighting a steady wave of selling pressure. The question now is simple. Was Friday the start of something bigger, or the first warning sign that enthusiasm is already fading? Let's break down the chart and map out the key levels heading into Monday. Zooming out to the daily, there's only one candle to work with here. What we have is the shape of the debut itself. A wide push off the open up to 176 and change, then a steady fade into the close. That single candle frames the whole battlefield, a high at 176.52 and a floor down at 149.34. Dropping to the hourly, the story sharpens. The opening hour did the heavy lifting on the biggest participation of the day, and that's where buyers shot it to the distribution top at 176.50. Every hour after that printed a lower high. Momentum faded as the session wore on, and sellers quietly took control while the crowd was still cheering the debut. Down to the 5-minute, you can see exactly where it turned. Price tapped 176.50 just after the first hour, couldn't hold it, and rolled into a long afternoon grind lower. The key is where it found a floor. Buyers stepped in again and again at the 157.43 to 158.58 shelf, 4 separate tests. And that's the line that held into the bell. Here's how I'm reading it. I'm leaning bearish, and the reason is simple. This thing rejected 176.50 and made lower highs the entire afternoon, closing in the lower third of its range. But a lean is not a trade, and I'm respecting that demand shelf. Buyers need to prove it above 174.02 to flip this back in their favor. Sellers need to crack 157.43 to open the trap door, and a clean reclaim above 174.02 is where my bearish read invalidates. The chart has to show it, not predict it. So heading into Monday, here's the battleground. Price holding above that 157.43 demand shelf keeps a recovery attempt alive toward the 167.43 pivot overhead. Losing 157.43 on a body close puts the 149.34 IPO floor squarely in play. Above that pivot, the 172.35 to 176.52 distribution zone is the ceiling on anything bigger. That's the band a sustained recovery has to overcome before this becomes a buyer's chart again. Patience here is the edge. A brand new ticker with one session of history can create some of the cleanest opportunities and some of the nastiest fakeouts. Let the market show its hand first, then react. Remember, price doesn't care what we think should happen. It only cares where buyers and sellers are willing to do business. That is the breakdown for tonight. Real quick before you go, if you want to trade alongside me, this is the channel to follow. Every trading session, I break down the key levels that matter most. The areas where buyers may step in, where sellers may take control. The levels I'm watching for potential longs. The levels I'm watching for potential shorts, and what price actually needs to do before a trade is on. No guessing, no hype, no predictions, just price action, structure, and execution. Day trading is a skill, and key levels are where it starts. If you want those levels in your corner every morning, hit that subscribe button and turn on notifications so you never miss a breakdown. The chart doesn't lie. Let's get it. Stay patient, stay disciplined, and stay sharp.